Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your financial market update for this Wednesday, the 26th of July, 2017, after 4:30 p.m. Central Daylight Time. We had the FOMC, it's come and gone, and now we're back into the vote-a-rama in the Senate and other elements. Now, as many of you know, if you watch the metal video, while we are down in the silver and the gold, if you looked at the last trades of the day, you're sharply higher. So you're going to have a pattern here that's a bit bearish, but if you take out today's highs in the market, you create what we call bear traps there. In the stock indices, you gave up most of the gains, as you can see in the S&P, and you were down today in the Russell. We still had good gains in the Dow, the NASDAQ. Boeing had blowout earnings, and those were all very important events. Now, as we take a look at the highlights as I've prepared them of the FOMC, you've got the Fed leaving the target unchanged at 1 to 1.25%. Not really a lot of talk in the statement. By the way, the statement, I'm told, had 11 more words than the statement of the June meeting. It's strange, but that's what it had. But they left everything unchanged in terms of the target. They voted 9-0, which is different than the last meeting, to leave today's action stand. They said the shrinking of the balance sheet should start soon. Traders seem to be interpreting that to be talk beginning in September. I don't know. If the economic data doesn't pick up, I am not as convinced as many that the Fed's going to just start shrinking their balance sheet. Labor markets continue to strengthen. That's good. The Fed sees household expanding their spending for businesses and the households. That's good. However, inflation continues to decline. They expect inflation to rise to 2% over the medium term. Medium term, transitory term. I don't know what these things mean. The risks to the economy are balanced, and they're going to keep reinvesting securities for the time being. That's how you shrink the balance sheet. If you don't reinvest them and you take them back as they mature, then what you've done is you're stopping the balance sheet from growing. And if you think about it, you're taking a buyer out of the whatever sector they're buying, typically 10-year bonds, and suddenly what's going on there, fewer buyers, maybe rates have to go up. So it's another way that they can control what they've got. So as I'm looking at the markets, let's go to the charts and let them do the talking. For the week, we're up 3.75 points. That's not a big gain on the week, but it's another up week. We made a higher high. What you don't want to see is this low of last week taken out, and I'm not saying it will be, but the chart action today, not great. You made a new all-time high. You closed lower on the day. The market still has a pattern that I tell you is ugly as far as I'm concerned. I said this yesterday. I don't know what the real low is. The swing line low is here, but you had a lower and low here, and the market comes up. I want you to remember this pattern right here, too. This is what you call an outside day, and as this day you close down. Now, in the gold and silver, you have outside days down, but you're probably going to be attacking those highs. When you did this, this laid what we call a bear trap, and the market kept moving higher until today's high. That's the highest high, in fact, of the whole move. If the market's going to come down and correct, what you don't want to take out is 24.6275 to keep the swing line, these brown lines, in an uptrend of higher highs and higher lows, okay? But Bollinger Band not hit recently. Don't know if it means an awful lot right here, just not hit on this rally. And here's, to me, still the important factor. As long as the embedded reading stays in place, and embedded means the market converts itself with these two numbers, they get up to 80, and normally when you first hit that, you're overbought. In fact, I think anything over 70 is overbought. But if they start going sideways over 80, as they've been doing, that overrides all the daily chart action with the theory in place that momentum leads price, not price leads momentum. And that's still very much in play. So everything is still, as I'm concerned, bullish. You are overbought in the Dow. You are not with an embedded reading. You got up to the upper Bollinger Band area. You missed it by 4 ticks today. You closed nicely higher. We'll see if the market can hang in there. And the trend is up. But it's an overbought market with upside bias into resistance that is now overbought. In the NASDAQ, like the S&P, you have the embedded reading. And until that's lost, the bulls, I think, will continue to buy the breaks. What would break the pattern of the higher highs and higher lows is taking out 59, 15, 75, about 30 points away. In the Russell, here too, you faltered again at the upper Bollinger Band. Now, not all these markets are getting to the upper Bollinger Band. You haven't done it in the NASDAQ. You missed it in the Dow. But the Russell did. It got thwarted there, and now it's pulling back. It's interesting where the current 18-day average is. It's going to go up tomorrow. It's going up on average right now 2 to 3 points a day. It's probably going to get up tomorrow to the 1430 level, which is just above that 1427.90 with an embedded reading. So I think you'll see buyers show up on a break, and late in the day, if the break doesn't get worse, be interesting. If it gets worse late in the day, you could lose embedded readings if you break, and I'm not saying you will. In the VIX, you came down, got to the lowest low, 884, and you spun back up. And you know what I've been telling you. It's so hard at these numbers because a 5% break, a 10% break, add up the points. When you're at 9, a 10% break takes you down to 8. So yesterday in this market, you finished the day at 943. Today you got to 884. Well, that's more than a 5% break from the close, and the market was able to snap back with an outside day up. Now, it still has the embedded reading, but as I've told you, on a percentage basis, the downside isn't carrying that far in real numbers. It is in percentages. It's not in real numbers. And now until you take out today's low, well, you might be getting a rally in the market back towards that 18-day average. If you do, what do you think that means for stock indices? Something to think about. The British pound, I'm sorry, not the British pound, the September T-bonds are stuck here at the 18-day average, but today's break in the market carried it to 152.8, which is under the 152.12. You're out of your uptrend. You have a higher high, a lower low, and you're just stuck at that 18-day average. That's what I'd expect as the market looks to reestablish whatever it's going to do. And momentum has fallen back to the point where it's in the 50s, which is neutral. In the 10-year notes, we have a market that had a reversal of types and then came back up strong in the day. Pretty crazy. And where did the whole battleground happen? 18-day average of closes. But the break yesterday took out that low. So you have a higher high and now a lower low. You're not trending again. And battleground, 18-day average of closes. Should the market be able to spurt higher and overnight, and because what you do is you get a U.S. reaction to what the Fed does, then it goes to Asia, because when we get this, they're asleep, folks. I know people find that hard to believe with 24-hour trading, that people sleep. They sleep. They're going to react, and guess who else was sleeping? The Europeans. So then they're going to react, and we walk in the morning and we get what I call the yin-yang, because we react one way, they all can do something different. If they decide that the Fed is on hold to do nothing, if the market rallies, 126.15 is the number that you might go to. If it falls back, the 18-day average looks to be the first support. Dollar index, still bearish as can be, outside day down, which tells me that I don't want to see today's high taken out in the next 2 days. If it is, even with the embedded reading, it could be setting a trap for more of a rally. Don't take it out, and you can continue still right on through. Take it out 3 days from now, I don't care. I don't want to see it in the next 2 days. The euro currency, still with the embedded reading. You have a market that had a reversal up late in the day, a powerful reversal, as the traders in the FX markets are thinking, again, the dollar, no real policy changes. Europe's still on tack for more growth and potentially raising rates, so where the cycles are. If you look at today's low, it did take out the last swing line low, but it doesn't matter a lot when you have the embedded reading, and that's, to me, the key. Where did the market stop again? That upper Bollinger Band. Now, some of you write me and you want certain charts done, and I do look at the messages on YouTube. I don't respond buy here, sell there ever. I'm not allowed to. I can do the general talking as the government allows me to do. I am a registered broker, and because this is open to the general public, I've got to have certain caveats. So I'm putting this chart on for you. If you look at the low today of 78.73, did not take out the previous low. You've been in an uptrend. The CPI numbers did not make what they had to in the Australian economy, which I think puts the RBA, the Royal Bank of Australia, on a hold pattern, and I think the market's looking like that. So until today's low is taken out, you have an uptrend into place. You again moved away from the upper Bollinger Band to the right, and if it wants to continue up, this is the number I'd look at. Like in the other currencies, when you get an outside day up, you don't want to see today's lows taken out over the next 2 days. If they are, I would not be surprised then to lose the embedded reading and return to the 18-day average of closes. In the yen, the market is back to the resistance point of the 100-day average of closes. It has been in an uptrend. It's refusing to embed. It's just staying overbought, so something we have to consider. We have already absorbed the news that two of the policymakers on the Bank of Japan, new ones that came on, said that they are not in favor of reducing the stimulus being offered until inflation targets of 2% are hit. In the crude oil market, you're right up to the point where I mentioned yesterday, and I'll say it again today, where the market is, I think, seeing hedging. Now, another thing's happening here. We have come off the $44 area, and we've come off the $42 area of June. As we're coming up, people will say, well, maybe that's going to bring back a certain amount of the rigs in the Permian Basin and the other basins. There's a good chance it can. But we're also running out of rigs. Yeah, that will be, if you get my market letter, I covered that yesterday, and today I've covered in great detail offshore drilling and real drilling. I'm not talking shale. And I talk about the increases you're seeing there. And what's really happened is because prices are into the $48 range, and I think the trading range here is probably something in the neighborhood of 52 from this area down to that 42 mark, I think that you're going to find scale-up movement. We saw today that the sanctions on Venezuela did not impact the oil, and that's a good thing because that could kick the market up another $4 or $5. We use a lot of that oil. So just looking at it, this is a resistance area. You're not trending, and you are overbought. Gasoline. You are overbought. You are not trending. You got a lower low and a higher high. Yes, we all can see the price movements up, and I can argue that the bias has been up through all that. That's not what I'm saying. I'm saying in pure charting principles what the market's doing. It's certainly going up, and we're all aware of that in the pricing. In the nat gas, this is a market with a pattern of a higher high and a lower low. Momentum is pointing down. The bias is down because you're under the 18-day average of closes, but there's not really what I'd call good chart setups on this. As you can see behind me, the boards are now clearing as we're getting ready for trading. And one of the things I want to remind you, for example, today in heating oil, we issued a new chart of the day because we got a new price count. It reverted from downside counts. Those are over, giving you some upside counts. Where do they come in? How do you get all this information? Well, you can either call my staff at 866-973-2077. You can go to our website, www.iraepstein.com. You'll see a carousel of free offers on our homepage. Click any of them. The forms will appear. Sign up for your chart of the day. We send one out typically, maybe two a day, in fact. You can click right on up here if you'd like, because that icon that you see me with YouTube, if that's what you're watching me on, will bring you to the forms. And underneath us on many websites, what does it do? It says click here for Ira's free offers. I'm winded today, but there was a lot to talk about. You have a great day.